All right, we're almost to Friday here. Here's a watch list video for Friday, March 23rd. This is a SPY, and it was a nasty day. I think the Dow was down like 720 points today. We took out the early March lows. We're headed down maybe to the 200-day, which is what it hit during all the chaos of the short volatility unwind that happened in early February. Some really ugly action in the SPY. The good thing, and I was saying this in chat today, the good thing about being a day trader is we're extremely nimble, right? So I'm not sitting on a bunch of swing trades and watching my account go down while I'm trying to make some money day trading to offset that. I'm in cash every night, right? So even though the Dow was down 720 points, I didn't have a huge day, but this was basically my day. I had a trade in AMTX 411 and a small trade in Apple for 110, and I traded one other symbol for one win and one loss that basically offset each other. That's not a huge day, but it's also not a bad day when you consider how ugly the market was. And again, I'm back in cash right now. I'll talk about that AMTX trade as I go over the morning, or as I go over the daily watch list for tomorrow. Real quick, I'm going to point this arrow in here, pointing down to the description. That special offer for the 2004, the year we came, the year that we started at GreatStockPicks.com. Been around a lot longer than most, right? That is the year we offered a lifetime membership and dirt cheap. And currently in the description below is a link to that same offer, which people said, why are you doing this? What's the special? For one, I didn't run a St. Patrick's Day special. But for two, I'm trying to get as many people in the room as I can to really see what we do, all right? Because, I know there's a lot of junk being taught out there. And if you're trying to become a professional day trader, you're not going to do it by being in a room where you've got a moderator and a whole bunch of people that are just trying to get rich, right? A whole bunch of newbies, and the moderator literally jumps in XYZ at the open. I know it's out there. I've seen it happen. I get emails from people. Hey, this stock dropped 30% in the first 4 minutes after the moderator took it at the open. And they're wondering what they did wrong. I'll tell you what you did wrong. You jumped in something at the open. There's no setup. I was saying in the chat today, there's maybe 4 times a year that I will call something right out of the gate. And that would be predetermined before the market even opens. And I'll tell everybody, hey, this stock is meeting our straight out of the gate gap play parameters. And even then, if it gets to this price in the opening minute, I'll take it. But I never, 0 times a year do I take something at the open blindly, right? You have to, as a matter of fact, one of my rules will not even allow an entry until at least that opening 2-minute candle has formed, and I can then start looking to see which side's which side's winning, right? The inflection point trade. Sellers come in, but they're gonna fail right here and have to cover. Those sort of setups. Jumping in right at the open, you're not learning anything, even if you get lucky. The market, anytime you get lucky, the market will get it back tenfold. So you have to have a process, all right? Can't emphasize that enough. So one last preachy comment, and then I'm going to go into the watch list for tomorrow. And that is something I tweeted today on StockTwits and Twitter. And it is simply this. The most important mindset that a person must have to become a professional trader, it is a defense-first mentality, and there's no question in my mind about it. All right? You can be a good trader. You can find great trades. You can have huge wins by taking a huge position on a setup that you love, and none of that matters if you don't play defense first every trade, every day, every week, every month, right? Because one trade can take you completely out of the game. If you, for a brief moment, lose that defense first mentality, it can all start to unravel, and that all happens in a split second decision where you decide, to heck with it. I'm going to average down. I'm going to blow off my rules. I'm not going to honor my daily loss limit. I'm not going to honor my stop loss limit on this trade, right? Anytime you do that, you have to have unrelenting discipline. Anytime you do that, that decision to blow off your rule, right, and maybe average down when you know you shouldn't, or to maybe say, you know what, I'm not going to stop out here. I'm not going to hit out of this trade even though it's not working. That decision takes a split second. And once you do it, that snowball can start rolling, right? And that is the beginning of a trading death spiral. So you have to have unrelenting discipline. That's the only thing that separates me from most traders. Most traders out there know what a good setup looks like. And they know, how to enter a position, and maybe even how to scale out. The only thing that separates me from the 90 whatever plus percent of people that won't make it because they can't stay in the game is discipline. Is unrelenting discipline, right? So defense first mentality. Most people I know can jump in, and make money on any given day by finding a good setup. But it's unrelenting discipline. It's defense first mentality, and it's always thinking defense first, and it's consistency and all those things that separate professional traders from everybody else. You have to refuse to ever take a big hit on your account. Now, you're not going to become a professional trader until you've taken a big hit, or 2 big hits, or 3 big hits, and I've probably taken 10 or more in my life. It takes repeated mistakes. You know what? If you haven't said to yourself, I can't effing believe that I effing did that effing again, right? If you haven't said that sentence to yourself 3 or 4 times, you're probably still not a professional trader. You have to go through the pain until the pain becomes so unbearable that it forces discipline for the rest of your life. All right? You got to tap into that pain, but when you're getting ready to screw up and make that split-second decision, the next time you're getting ready to say, you know what, I'm not gonna stop out. I'm not gonna average down, or I'm not gonna honor my no average down rule, whatever. The split second you feel yourself starting to blow off one of those rules, you got to harness the past pain of an account blow up or of a trading death spiral, and let that click in your brain and say, no, I'm going to hit out right now. I'll think fresh once I'm back in cash, and I'll start over fresh. And then, if you've hit your daily loss limit, you just walk away, and tomorrow is your new starting line, like the starting line in a race. And your past balance means nothing. You're starting fresh after you do that. So anyway, enough of the lecture, but I figure there's probably some people on a day like today that probably need that, because it was an ugly day, and I see a lot of terrible things being taught to people, being taught to chase, people being taught, newer traders being taught to chase. And you know what? Whoever's teaching you that, or teaching you to buy at the open, or teaching you to chase momentum and keep adding more as something's going up, especially in this market, they're not looking out for you. They're looking for you to pile in so they can sell to you. You really need to find someone that's going to teach you to be defensive and stay in this. You can't become a professional trader. You can't make it in this game if you can't stay in the game. So defense first, no matter what. I can't believe I've rambled on this long. My watch list for tomorrow, AKER. I love this chart setup. I don't generally trade the sub-dollar stocks, but you had a nice pop here to 88.5 cents. My apologies for rambling like that. Then you've got a lower high here of 85 cents, and you really have this kind of tight little flag. And really resilient in an ugly day, right? So I like this maybe over 83 or 84 cents. You might just break out of this tight range. AKER, BLPH. Again, a really weak day in the market, really strong day for this one. And you can picture a trend line. Follow my mouse here, right? Today really kind of broke out of that downtrend on decent volume. We'll see if we get a follow through in it tomorrow. AMTX. This one was already on watch if you watched my video last night. Okay? You had this huge pop and a few days lower, and you see this spike. This is that one I made over $400 on. Now, I didn't jump in at the open. We don't teach that. Let's go to 5-minute candles, and I'll show you the setup. Okay, so it opens at $2. By the way, I love when a stock opens at a whole number and sells off later in the day. If that breaks that whole number, you not only have the stock going red to green, but you have it taken out the high of day, and you have all the sellers from the day underwater once this breaks the whole number. And oftentimes on the tape, you'll see a big seller at that whole number. So this starts to get volume, gets up near 2, and I said, hey, I'm on the microphone. I said, hey, everybody, I like this AMTX over 2, or if it takes this seller out of 2. As a matter of fact, Wayne and I teach, you want to try to be the last one to buy it at 2, or the first one to buy it at 201. Anyway, long story short, we get the break right there. I actually got filled right at 2. And look at that, the very next 5-minute candle. And this is just a chart setup playing out just like we teach, right? Huge move, a few days lower on declining volume, and I'm showing you 5-minute candles panning out over the course of a few days, and then a kind of a narrow range, whole number, I mean, just a beautiful set. Yesterday's high above is another catalyst, and look at the volume that came in. We get long here, and we simply scale out into this, right? It's that simple. And over the next hour or two, it came back to our entry. I don't care. This was the move I was looking for. You know, that was a quick $400 for me, right? But it wasn't any kind of random entry. I always tell people in our chat room, every trade I take or call in chat, I can give you 2 or 3 reasons why I like it at that price at that time. And I promise you none of them are ever, I'm buying at the open, or hey, it halted, I'm going to buy it right out of the halt. That's just guessing. And it's actually using people to push it higher for you if they have enough respect for you to chase your nonsense. You need to understand setups. All right, anyway, I'm really preachy today, and I apologize. GSVC held up pretty well. I've been talking about this one. Everyone said that Dropbox goes public tomorrow. They have a stake in it. And then you've also got early April Spotify going public, and they have a stake in that too. I expect both of those IPOs to be kind of everyone talking about them. So this one, again, this is, I don't know. It's kind of a nice chart setup. Actually, had a nice run, kind of flagging, and you could argue the red day was because the whole market was so weak. OMER gapped up, sold off with the market. This one had decent news. It's got I don't know. How do I word this? It had a red day, but if it catches a bid tomorrow and gives us a proper setup, might get a nice pop tomorrow. So we'll see. I'm not in love with that kind of setup. Anytime you have a gap up that fails like that and ends up putting in a big red candle, usually I don't want to trade on the next day, but OMER is worth a look, I think. FSNN, you can also picture a trend line here. You can kind of use the red line here, the 20-day moving average, as a loose trend line. See the nice little extra volume pop and a kind of a break through all these moving averages today. See if we get a red to green or something like that in it tomorrow. A few more. ACN, big down day into price support from early February. See if we can catch a bounce in that one. U.S. Steel feels like the letter X, like it's oversold. You had some kind of nice area down here where it bounced that's worth watching. If it really gets stupid to the downside, we want to watch that hole number 30 right around the 200-day. So anywhere down here, it's worth watching for an intraday reversal setup just for a trade. Remember, I'm a day trader. I'm in cash every night, so I'm trying to find things that might give me a trade tomorrow. ABC seems pretty darn oversold. It's like 5 red days in a row or something like that. We're going to watch that one for a bounce. And RXII was on watch today. No trades in it. Goes on watch again tomorrow. Very close to the hole number 4 plus the 20-day after a really big move and now a few days lower. So that's it. I'm going to add some gappers in the pre-market to this list and hopefully catch a few decent trades tomorrow. Sitting in my account, with my account at highs for the year, which is something to be proud of when you look at the market not so pretty and the SPY is actually red for the year as is the Dow now. So, rooting out and finding decent setups and only trading them at those proper points, you can make a decent living in the market. You just got to be selective. I think the one thing I'm best at is doing nothing unless and until I have a proper setup, right? And then I'll take a trade, scale out pretty quickly, and try to go to break even on the rest and see if I can't catch a runner for the last third of the trade or whatever. But it's all about defense first and proper setups. I'm done babbling. I apologize. I was long-winded tonight. Have a great night, and we'll see everybody tomorrow.